Hello again, everybody. Doing here from DRFX Forex Swing Trading. Euro Japanese yen. Now, last time we took a look at it at this pair, we noted that there was a bear crown setup taking shape. The left tip of the bear crown was formed with this range setup at this area here, followed by the pair of double tops that formed the center tip. And now we have the pennant setup that has now completed the right tip. So a bear crown reversal setup that normally indicates that the market is going to reverse and head bearish. So right now, in terms of what we're seeing here, the market attempted on two occasions to break above the resistance boundary, but on both occasions failed. This led to the formation of double tops that are a common candlestick pattern that you see when false breakouts are about to take place. So in sync with that signal, the market has broken back inside of the consolidation and out towards the other end of below the support boundary. Initially, the market gave us two bearish signals that were too weak. They were too weak to trade. Some traders may have entered them, but generally speaking, it's normally best to wait on a stronger signal to take advantage of them. Nevertheless, we see here that the market broke below this support point, but the distance below which it broke the support was not enough to justify the trade. We did see a stronger signal and a full body candle that was significantly below the support, but the candle itself was not strong enough. However, today we finally got a very strong tradable signal that we can take advantage of. So based on the fact that we're in a false breakout trade with regards to a pennant setup, the market is expected to move pretty quickly, and we should see the market move towards this area here, which should be close to the breakout equivalent. Now, in terms of a trading opportunity, one of the ways in which we can take advantage of it is to go on the 4-hour chart. Some traders would use this opportunity to go on the lower time frames of 30-minute chart, 15-minute chart, or the 1 hour chart. That is possible as well, but my preference is for the 4-hour chart, where the signals and the stop losses are a lot stronger and a lot more reliable. Now, in terms of where we're going to enter and where we're going to place our stop losses, you can see here that the market formed a small pennant setup that led to that daily candlestick signal that we just saw. So one of the ways to trade this is to place a stop loss above the resistance of the pennant and enter at this area here, and then aim for our target of 200 pips. Now, this area here would be placement of a stop loss above the resistance. This would give you a stop loss placement of 135.30 thereabouts. If we're using a 120 pip stop loss, then that entry order or that entry is gonna be 135.30, so that's 134.10. That would be where we would want to enter using a stop loss of 120 pips. Of course, there are traders who use a 4-hour chart who may use a larger stop loss, but I believe that 120 pips is pretty appropriate for whenever we're talking about an entry on a 4-hour chart to take advantage of a daily signal. So 120 pip stop loss, enter at 135, 134.10. 200 pip target would be at 133.10. If my maths does not fail me, 134.10, 132.10 would be our target. So in this situation, using a stop loss of 120 pips, we're gonna need the market to pull back to this area here. After taking us in the trade, our stop loss would be comfortably above the resistance boundary, and we're gonna wait until the market U-turns to continue to break out bearish and hit this target here. Based on how fast the market is expected to move and how fast it's moving right now, this target should not take a very long time to be hit. probably a couple of days, 1 or 2 days, or maybe even 3 days. So this is a valuable opportunity to take advantage of this expected movement. Some people would already be entering right now, and but that would, if your stop loss is going to be above this area, the stop loss is going to be very large. But some people are comfortable with that, and as long as your risk reward compensates for that on most occasions, then that can work out for you as well. But my comfort zone is to use 120 pip stop loss and with a 200 pip target, which gives me a comfortable risk reward ratio. So right now, if if person are going to take advantage of this, you're going to have to place your stop loss here, place an entry order, and then your limit order would be at this area here. I would take I wouldn't be looking to trade this because right now I'm in another pair. I'm in another trade. And with swing trading, I generally only hold one trade open at a time. I wait for that to close and then take a look at other opportunities. So depending on when that trade closes, then I might come back to this area, to this trade, if it is still possible. But if you are still in that trade that I'm also in, and or you're in another trade, or you're in another trade, but you can hold two or more trades at the same time, then you could take advantage of this possibility here. Entry order at 34.10, a stop loss at 34.30, and the limit order of 32